Well, ladies and gentlemen, as you can see, things are getting serious. The risk dial has dropped to just about zero, and as a result, the moving averages are now below. Sorry, prices below the moving averages in all the daily, weekly, and uh, monthly time frames. So this month is going to be very key. In fact, this week is going to be very key. You can see the moving averages have started going back towards zero, and very soon they could give us a risk-off signal. Unless we have some bounce in price, this is almost bound to happen now, and we have to be well aware of it, and we have to look at deviations to help us decide where to buy for a bounce.
In deviations, we will see that basically we have the middle line comes in at 300, 3200, 3207. It's unlikely that that will provide us with much support. Uh, it certainly should for a while, but after that, we have a long way to go down. If we have a look at the sectors which are most oversold, energy, telecoms, but we still have U overbought, and we have B going down into the reds. XLK, I think, will definitely test this moving average, which is quite a long way below the market. It's another, almost 10% below the market. So that does not tell me that we are going to have a lot of support if things starts panicking and we start breaking this line. It could get quite ugly. But at some stage what we know is that the Chinese efforts are going to bear fruit. It's almost bound to happen. And when that happens, the market will absolutely fly higher. So what we have to do is we have to look at in detail through all the time frames and decide what the best levels are. When things start getting ugly, the 18 line is unlikely to be the line, is it? We could easily go down to the 17 times line, which is just over 3050, let's call it. So bear that in mind. We're an awful long way up. The fact that bonds have come back down so much is going to help, but the volatility could get quite hairy, and we will discuss that later. Our best clues are still likely to come from the bonds. As you can see, bonds light leased all last week. They were basically in a bull market. Now we're looking around this 125, 126 area in the 2 years to provide support. That's really as good as you can hope to get. If we look at the 10-year against the 2-year, it's stopped going down. This 13-14 area is absolutely key. Again, I would definitely buy it for the long term. For long-term accounts, buying the 13 to 14 basis point area is probably very wise, because the Fed will likely come in and support the market by adding liquidity. If we get any kind of a panic in the S&Ps, which is certainly possible, I would certainly expect the 2-year to start outperforming on expectations that the Fed will start cutting, and cutting quite fast. In fives, well, this line here, 116, we are likely to test it next week. 116 is the level in the 5 years, almost certain to get down to it. If we have a look at the 10 years, here we are bound to get to 140 within a couple of ticks of all-time lows. That is really as far as I can see the market going for the time being. That is still 12 basis points. So it's worthwhile still being long of that market and not fighting it. But as I said, 2s, 10s at some stage, that is going to be the trade. And the same story really in the bobble and the bund. The bobble really now doesn't really have much support until we get to -70. I know, amazing. We were here at minus 40 and everyone was bearish. Minus 48, sorry, and everyone was bearish, and now we're going to go to minus 70. Almost sure that we get as far as that. As far as the bunds are concerned, the target really is we have nothing until minus 47, as you can see here. And after that, it would not really surprise me to get to minus 60, minus 58, minus 60 down here. A long way to go for all this. People are definitely beginning to panic, and the bonds are reflecting that. It's unlikely that we get any kind of sustained move back in the bonds for the next several weeks until things are much clearer with this contagion story in China. If we look at the yield differential between Germany and the United States, we've got to go an awful long way back to see where the real support is. Real support is in this area, around 175, 178. It could get ugly, simply because there is so much more room in the States to come down, this trend will continue, which should at some stage really impinge on the US dollar. Well, the DXY didn't quite make it to my target of 98.33, closed below 97.87, closed below 97.52. If you look at all that, really you would have thought that there is not a lot of support until we get down to 96.50, which is the really big key level. 1, 2, 3, 4, 5 closed on the low of the week. You would have thought that that is pretty decisive. In the US dollar, we will trade 96.50 over the course of the next week or two. Pretty obvious to me that that is the direction of travel at the moment. Euro USD, lovely move back up here in the stochastics. We have this gap here, don't we? We have this gap going all the way to 112.56. Let's fill that gap. It's going to be very, very interesting, isn't it? It's going to be a very, very interesting move over the next few days. Being long of euros is probably the best idea here. It's in this range, isn't it? But the fact that he couldn't break lower and he closed on the highs of the week tells me that we stop everybody out and we go up towards this 112.50 area, which coincides with the analysis in DXY. It looks like a couple of weeks of dollar weakness are on the hand. Gold is actually the one that's looking the least bullish if we are going to get dollar weakness and bond strength, i.e. weakness in yields. It should be going up faster, but it's being held up by the Bollinger Bands. But it's doing one of these stories, so I would expect even if it goes sideways for a couple of weeks, it's going to break up. We are now well above this 1578 level on a closing basis. We've managed it. I think over the next couple of weeks it pushes up over 1600. If we look at that on the dailies, it's likely that we see higher than 1600, probably even Monday, test this spike high of around 1616, and then we see. It's worth looking at the monthly chart first. Ugly candle, right? We've closed right at the lows of the month. Where is support? Well, support on the monthly charts doesn't come in till 30.93, and then here, this is the real support around the 30.40 area. Is it possible? Absolutely. If things get into a panic, it's absolutely possible. That is what you should be looking on a monthly basis. If we look on a weekly basis next, well, where is the where is the real support? Well, the real support is here, around the 31.20 area. That is where the real support is. I'm telling you like it is. It's looking ugly. I like the 3200 area. I no longer really like the 3200 area. I like this 3120 area a lot. But if we even go on a daily time frame, we see that we are orderly. Okay, we are within the Bollinger Bands. The Bollinger Bands come tomorrow are going to come in here around 3206 or something like that. We probably get a small bounce back up to the 20s and 30s, but I would have thought in 2 or 3 days time, if things haven't calmed down, we can easily come down to the 0.786 level, which is 3120. Okay, so this is really probably the better level to shoot for on a daily basis, sometimes next week, unless the news is really bad. But it's been so orderly up to now. Look at it. This is the 195-minute chart, which divides the day into two. We have now definitely turned the moving averages. Okay, so now the 3270 is going to be the area that we need to break to start going higher. But in the meantime, we'll go lower, and the extension here, 3150. This is a great level, 3150, 60. Great level to pick up some kind of real panic initially on Monday or Tuesday. I don't think it's going to happen Monday or Tuesday, simply because it's a new month and there are monthly flows, and there will be a lot of companies doing buybacks. But that is really the target that you're looking for, this 3150 area, 3160 area on a short time frame. Now, NQ is also interesting. Look at it, 1, 2, 3, 4, 5 days. It's still closed higher than the open. I don't think that is going to last. I think we're going to have a break at some stage and do an ABC at the very least. Looking for this 8800, 8750, 8800 level. That caught it so many times in the past. Let's call it 8750. It would be nice to get to down there. That would be probably a good area to buy some calls in NQ. The one that really gave up the ghost and told me that we were done was the rut on the monthly. It closed below all the levels that are important. The rut is looking very weak. It could easily come back to the 1550 to the 1570 area. It's that's another 3-4% lower. It's looking pretty bad. I don't hold much hope for it. Volatility actually closed the week where it opened the week, but I really would not be short of this. This could get explosive, but well into the high 20s. It's just, there is absolutely no reason to be short of it now. It still has to close above 1980. I presume it will do on Monday, and then it's just a one-way street, probably to this kind of level where it always seemed to get to, around the 25 area. If it gets to around the 25 area, it's probably a get out now signal. You've made enough. So that is it cannot be excluded. In fact, I'm gonna put in a line at 25 just to remind me. It's quite likely that we will see that at some stage. 23 to 25 is the area that I would probably want to get out of some longs, but it's all telling me that we are going to have a continuation of risk off in the week ahead before we see some material data from China that changes things. But when we do, the move back down in volatility and the move back up in equities is going to be very strong, simply because I don't believe that bonds will give up nearly as much as they've gained, and in which case this will make the expansion in multiples even more likely in the equities. Finally, EEM, which is going to be the most wonderful long when this is all over, and this will be all over, we all know that. Where to get the calls in? Anywhere between 38 and 40. 40 will be the weekly Bollinger Band, and the low, and you can see how many times that was the area to buy as well. But if things start getting really ugly, I would have thought this 37.64 level is going to get tested. Still, to me, that is just a gift over for the long term. If we can buy calls in this area for the next year and a half, I think that is going to be just a monster of a trade. Here are the bias levels. I think it's likely that in the 2-year we trade down towards 126. I think that the 5-year, the belly of the curve actually inverts and goes down towards the 117 level. I still think the 2s, 10s around that 14, 15, 13, 14 level long term are a great risk reward. The Fed is going to have to do something pretty spectacular. The bubble minus 48, but it's going down to minus 70. Bunds minus 47 to minus 50 is now likely. The first level support is 3204 in the SPX, but at some stage this week I would not be surprised to see the 3150-60 level, probably even on Tuesday or Wednesday. VX, as I said, could be explosive. I wouldn't think of shorting it between until we see the 23 to 25 area. The risk reward is just not there. The dollar, I'm now looking for 96.50. I think it's now clear that the differential between the bond markets is going in that direction and will remain in that direction, and as such I think the dollar just has to suffer. EEM, very tough to know what to do. Certainly do not short it, because at any moment they could say coronavirus, we found the vaccine, we found this, we found that, the death toll is going down rapidly, in which case he will just scream 5% between quotes. But if we do get this panic and we see the 38-40 area, we have to buy calls. We have to buy 1-year calls, and we have to be very happy that we managed to get them. Thank you very much indeed, and tweet you on Monday.